The information in this recording is general in nature and should not be considered personal advice. Please consult a professional and qualified financial advisor to discuss how this information may apply to your personal circumstances. Thanks for listening.
Hi everyone, Aadil Abbas here from Own Financial Planning. And in this video, we will be discussing risk mitigation strategies which can cater for any bumps along the way to achieving your financial goals. At Own Financial Planning, we believe that getting your finances sorted is like building a house. You've got to have the right foundation, the correct materials, and it can take time. And when you're building a house, having a strong roof is critical to ensuring you can enjoy the house you've built. Essentially, a strong roof means that it can be raining outside, but you are not getting wet. A strong roof for your financial house should consist of three elements, as you can see on this slide, at the top of the slide. Starting on the left, emergency fund. Now think of this as your financial bushfire plan. It's your emergency stash of water, canned food, and a battery-operated radio, but for your finances. So when life decides to toss you a curveball, like an involuntary, like losing your employment, you'll be ready. No need to dip into your investments or max out the credit card. The funds got you covered. And for us, that's typically 90 days of expenses. At the right, it's your estate plan. An estate plan ensures that if the worst happens, you don't want to leave behind a mess for your loved ones. So it's important to have the right estate planning documents in place so that your assets go to the right people at the right time and with the least amount of tax possible. And that's more than just a will. And finally, in the middle, we have insurance, which is the topic of our video today. And to help us understand why we're talking more about insurance today, let's look at some key statistics. So as you can see here, 1 in 4 men and 1 in 3 women during their working life will have a heart attack, stroke, or cancer. So if you have a partner, that's some pretty high odds that can really derail your wealth plan. And also, as you can see here, most people in Australia have their car insured, but not what gives them the car, which is their capacity to earn an income. So 8 out of 10 of us have our car insured, and only 1 out of 3 of us have our income insured. That's pretty startling, isn't it? And yet, if you were having a bet on the Melbourne Cup, and there was over a 30% chance that your horse would win, you probably would put some money down with those odds. That's how we see insurance actually here at Own Financial Planning. How much can you afford to bet? How much risk are you willing to take with your goals? So to help us learn more about insurance, I'm delighted today to be joined by Geoff Mulray from Neos Life. Geoff is a business development manager at Neos. He's been in the industry for nearly 15 years. Neos is a leading and innovative life insurer. Their aim is to provide value for money products and outstanding service to Australians who want to buy life insurance through a financial advisor. So welcome, Geoff. Thank you for being here.
Thanks for having me.
Geoff, why don't we get started with the conversation with one first question, actually, which many of times we hear from our clients. What are the different types of personal insurance which should be considered?
There's generally 4 types of personal insurance that should be considered by financial advisors and their clients. The first one being life insurance. So this is where a policyholder is paid a lump sum benefit in the event of their passing or being diagnosed terminally ill. Next is total and permanent disability, or abbreviated to TPD. This is where the policyholder is paid a lump sum benefit in the event they can never work again due to sickness or injury in their current occupation or any occupation they're trained, qualified, or experienced to do. Then we have income protection. This is where a policyholder is paid a monthly benefit if they're temporarily unable to work in a full or partial capacity due to sickness or injury. The benefit amount is usually equal to 70 or 75% of their income prior to the event. Then we have critical illness, also known as trauma insurance. This is where the policyholder is paid a lump sum benefit if they suffer one of the listed health events as outlined in their insurance contract. The on-sale products in the advised market, they could often include 30 or 40 different health events, and these can include things like cancer, stroke, heart attack, and many others as well. And lastly, another one which I thought I'd throw in there as well is child's cover. Now, it's not one that immediately springs to mind for people, but it can be very important. It pays a lump sum to a parent if their child sadly passes away or contracts a serious illness or injury.
Thank you, Geoff. Seems like quite a few different types of insurance covers which need to be really considered related to different types of medical or life events. So it's not as simple as just trying to think about life insurance, which people know about, or which people know about. So there is a fair bit of different types of things in order to consider this. Thank you. So that lead me to my next question, which is, given all these different types of personal insurance cover which is available, when should somebody think about insurance? And in your experience, what are the triggers which generally try to necessitate getting personal insurance?
Well, look, if someone doesn't have life insurance in place, then I think it's important to consider it now to ensure that you, your loved ones, your income, or your business has a financial safety net in place if unforeseen health issues pop up. There are many trigger points or considerations that might prompt people to purchase or review their personal insurance. Some examples that come to mind: people getting married or starting a family, maybe purchasing a home with a mortgage, or purchasing a business or a shareholding in a business. And lastly, it might seem like a pretty basic one, but any of us that earn an income, whether we're employed or self-employed, is a reason in and of itself to consider income protection insurance, because our ability to earn an income is often our greatest asset. It provides us with a standard of living and a means of meeting financial obligations. So protecting it is absolutely crucial. And now, for those that already have life insurance in some form, I think it's important to consider reviewing what they've got with their financial advisor, just to confirm that it still meets their needs so far as coverage, quality, cost, and contract terms are concerned.
Thank you, Geoff. I think those are very important, I would say, considerations. And I think I really like the fact that you spoke about a financial safety net. It kind of ties back to what we previously saw on the previous slide about having a roof. So I think you are kind of talking about the same concept of having a roof or a safety net, and your analogy towards income protection also is really interesting, because again, we see it in our own insurance philosophy when we work with clients to talk about income protection as being their biggest asset, their ability to earn an income as being their biggest asset, which needs to be insured. So I think it seems like all of us are trying to talk about the same things to our clients, and it's good to see that as an insurer as well, you kind of have a similar view. Great. Then that leads me to another question, or to my next question, which is, how does one decide how much insurance, how much insurance does one need? Or what are some of the best practices in your experience when determining the level of insurance cover?
Yeah, they can be tricky questions. Now, I guess some people might have very basic life insurance needs, so it could be an easy task to determine the type and the sum of cover that they need. An example of that might be an individual taking out $1 million of a mortgage. They might seek $1 million in life insurance just to ensure that their loan repayments and ownership of the asset are protected for the family if they were to pass away, for example. However, people's needs are often far more complex than this. So seeking the guidance of a financial advisor, for me, is often a step in the right direction. As you know, Aadil, you'll consider as an advisor a client's full personal situation, which might include their personal and financial goals, their income, debt, asset position, whether they have dependents, tax considerations, and the list goes on, in order to provide them cover that's tailored to their needs. Getting appropriate cover in place is one thing, but I also think it's wise for people to review the insurance that they have at regular intervals. I know that you guys at Own Financial Planning do this as part of your annual review when you catch up with your client. So I think getting the appropriate cover is good, but making sure that we're reviewing it to make sure it's suiting our needs is equally as important.
Couldn't agree more on that, Geoff, because I think insurance, when we take out the initial insurance, when people take out initial insurance, it is taken out at a point in time when you may have a certain situation in your life with regards to your finances and your goals. Now, as financial advisors, we regularly find that when we have a review with our client, things have always changed. Life is always happening in the background for people. So insurance, to ensure that the insurance they have in place is appropriate for the needs, to kind of consistently do a review of those needs is actually quite important, to make sure that neither you are underinsured or overinsured at that point in time. So yeah, I think completely agree on being not just having to determine what level of cover you need, but making sure it's up to date and suiting your needs. So Geoff, the next question which comes to mind then is that, is cost the only criteria when comparing different insurance covers?
Aadil, cost is an important consideration when comparing life insurance across different providers, and this will never change. We sort of have a saying in the industry that cost is king, or cost can be king. However, there are several other factors that I believe are very much worth considering. Now, firstly, life insurance can be purchased through different channels. So people need to consider their preferred approach, whether it's exploring cover via their superannuation fund or a direct-to-consumer offer, which is often purchased online or via the phone, or through a financial advisor who can access all options and provide advice which is very specific to someone's personal circumstances, as we've touched on today already. The second is the quality of the cover. Now, life insurance contracts in Australia can vary depending on the provider and the types of products they have available. Now, the old saying, you get what you pay for, can certainly be true of life insurance. So it's important that people consider the features, the benefits, coverage, flexibility that policies offer. And lastly, I think policy terms are very important as well. Now, insurance providers generally consider the past or present health of a prospective customer when their application is submitted. This is called the underwriting process. Insurance providers can share many of the same views towards assessing health conditions when they're doing their risk assessments via their guidelines, but there can also be plenty of differences as well. So I think it's important to consider a range of different options to ensure that people attract the best possible contract terms.
Thank you, Geoff. Seems like the devil is really in all the detail. It's not simply about cost. And I think people have to realize that they're entering into a legal contract with the insurer. So they have to treat it as an insurance as a legal contract. So appropriate, I would say, disclosures have to be made as part of the underwriting process. At the similar time, once the contract is in place, the insurer also has certain duties towards the life insured. Got it. Okay. So Geoff, we've got all this insurance in place. We are reviewing it regularly through a financial advisor or on your own. And then let's say an unfortunate event happens. Life happens, and an unfortunate event happens in your life. So in your experience, then, what are the most common causes of claim, and what support should one expect when what can be a very highly stressful time for most people?
Yeah, very important questions. Now, regarding the most common causes of claim, you'll find that these figures can vary a little bit from one insurer to the next. But recent insights from our partners at NEOS highlight cancer as the highest cause of claim, which accounts for roughly 30% of all claims. This probably won't surprise too many people. And cancer is followed by mental illness, cardiovascular, and musculoskeletal related claims. In my experience as well, just touching on the support, Aadil, claims teams at insurance providers in the advised market are generally very, very good at helping customers navigate the claims process. They all have a robust system in place. The staff treat people as individuals with care and compassion, which I think is essential. And financial advisors like yourself also play a very important role in providing further context and guidance to your clients during what is clearly going to be a pretty tough time in their life.
Thank you, Geoff. No, I think that's a very important point you raised around claim experience. And I think we, as part of our advice process, do talk to insurers regularly like yourself about the claim experience which our clients can expect at the time of taking out the cover. And it can be a criteria for recommending a certain client to go with a certain insurer as well. So similar to the previous question around cost, it's not just about the cost, it's also about it's also trying to think about, in the event of a claim, what your experience might be and what that may look like. So thank you, Geoff, for your time and insights this morning. It has been wonderful to just learn a little bit more and get into the detail of life insurance and understand different types of cover, understand the different criteria when we're taking out the cover, and also trying to think about the claim experience and how you can hold insurance. So really appreciate your time, Geoff. I think we hope everyone who is listening to this video found this useful to understand the role of insurance can play in your financial plan. Just to kind of as a final point, we hope you found this video useful to understand the role insurance can play. Feel free to follow us on any of these social media platforms for similar educational content. And if you'd like to discuss your insurance needs, please email us or get in touch with us via our website on financialplanning.com.au. Thank you very much for listening.